Hey, what is going on, guys, gals, aliens, and degen freaks? Welcome back to Dano Crypto. So on this video today, this might be one of the most important videos that we have made so far this year, because this chart and this tweet that we found perfectly explains what we have been talking about for the past couple weeks and the past couple months about this price action, this bull market, and when we want to start thinking about taking profits, when we have a time frame of when we want to accumulate our coins. And this is going to tie everything together perfectly. And I love that there's people that are thinking on this same level, because this is what is going to help you become successful in these markets. And you can even use this trading strategy and this chart and this metric and this thesis to make the most money out of your investing strategy. And all it does is it pulls these two key metrics together and correlates them with the money markets and investments and Bitcoin. And we're going to show it to you right now. So shout out to Max because BTC, because this person finally found a chart that is bringing this all together. Because if you've been watching this channel and watching this live stream that we've been doing every day, Monday through Friday, we've been really hitting this home on trying to get you guys to understand the halving, the Bitcoin halving, but correlated perfectly with the presidential election cycle. And so what this person did is that they correlated the IWM, which is the Russell 2000 ETF charted, with the US presidential elections and BTC halvings overlaid. And what this shows is that with the stock market and with Bitcoin, we see the biggest runs on the bull market after the halving in the presidential election. So we have the halving represented on the black line, and we have the U.S. presidential election represented on the blue line. So now what this does is this gives a really amazing metric of where you would want to start accumulating your BTC, your Ethereum, your altcoins, even getting into a little bit of exposure to the stock market and diversifying, and knowing that if you just bought and you DCA and you hold, and this person is, suggesting that there's all kinds of local corrections mixed in with this, all at the high time frames. So based on this data, positioning yourself in solid plays without leverage and just holding through this period of time has historically aged very well. This might be the most important chart and metric you can look at. You could probably throw every other chart out the window and literally just analyze this chart and say, okay, if I just accumulate and DCA and hold as much as I possibly can before the election happens, that there will be a ultimate run up in the election. It happened months after the election. What's important to point out here is that for the past 12 years, we've seen the same type of movement from risk assets. So pre-halving and pre-election correction, you see here, we have this pre-halving, pre-election corrections. We have some volatility. And then you have in the yellow, the orange here, the risk assets grind upwards into the halving in the election. And we've seen this play out in real time for this cycle that we're in currently right now. And then we've seen risk rallies hard after the halving in the election. So this is just perfect. I mean, this is the perfect metric to base your plan and your strategy on, and make this your thesis, that you're just like, look, if I accumulate strong coins into the election, and then the market has traditionally rallied for the next couple months, almost into a whole quarter, and then has a sell off and then starts to cool off and goes back into a bear market. This gives you the perfect opportunity to still be able to accumulate coins and know that you're not too late, you're not buying the top. And this ultimately right now is the perfect time to accumulate. And this isn't financial advice. It's just going off of these metrics and going off of a chart that looks like this and gives you perfect charts and data and time frames and 2 different metrics of the Bitcoin halving and the United States presidential election. Only 2. That's just 2 indicators and time frames of what you can look at. You don't need a bunch of RSI. You don't need all this stuff. You don't need all these things. All you need is just a DCA strategy and a time frame of where you can guesstimate, because you're not going to get the exact top, but man, you can get pretty close to the range when you have these metrics in place and you start to study, you start to think about the Bitcoin halving as your metric of the peak of the bull runs, because after every single halving, we've had a year. This is the time frame now where you have a year after the halving is where you have the biggest runs traditionally. And now people are thinking that with the Fed pivoting with the federal rate cuts, charts show that the S&P 500 does well following a rate cut as long as we are not in a recession. Now, traditionally, we've been in these sustained periods of weak and negative growth in real GDP, which is what accompanies a recession period, combined with the rise of unemployment rate. So currently now we are not in a recession, and times of recession was during the financial crisis of 2007 between 2009, and which was the inception of Bitcoin itself. And the shortest recession that we've had was in the COVID-19 2020 era, where we just had we had the lockdowns, we had all this stuff, and then after that was what ended up the massive money printing and the inflation problem that we are currently in. So what does this mean and how does it correlate? Because traditionally it says the majority of the decline in the bear markets occurred when we've had a Fed pivot. And then ultimately, when we had the Fed pivot, we had a correction in the S&P, and then we had a move to the upside after said pivot. So does that mean that traditionally markets tend to expect that get more money with the cheaper debt, then they're able to buy back in at the lows? That could be a metric, but it doesn't necessarily correlate like with the same with Bitcoin, because when we've had monetary tightening, increasing, monetary easing, lowering rates, and then monetary tightening, increasing rates, and then now coming up to another monetary easing of lowering rates coming up right now in September, this can correlate that Bitcoin and that the banks are able to get cheaper debt, which is going to still pump the stock market because we're not in a recession, and it's going to initially encourage the institutional buying of Bitcoin, especially with the ETFs and with retail having the access to these ETFs. And I think that with retail being a little weary to custodian their own Bitcoin is making these ETF products a lot more attractive to the retail. And to give you guys a metric of, speaking of retail, of when retail is going to be back in crypto, because that is the whole metric also that you need to be looking at as well. With that chart that we just showed you with the presidential election, with the 4-year cycle of Bitcoin, you need to be watching Dogecoin. Now, I know it's funny. You think, oh, why watch Dogecoin? It's an old coin. But if you watch Dogecoin and the trend of the search, trending search on Google, you go to Google Trends, do Dogecoin, and go for the past 12 months worldwide. And this will give you a interesting metric, because look, when we start trending up into the hundreds right here in terms of like peaking the chart, this was in that bull market, this little pre-altcoin season that we had this year in January, February, March. This is where we had the most attention on the market for meme coins, for the altcoins, and for crypto in general. And Dogecoin, look at this spike. This was such a massive spike here. And so this could have been the metric of watching for when retail starts to get more interested in the markets. And I've looked at my own channel and my own metrics where people were a lot more interested during this time in even watching crypto content. If I go into my crypto content and you go to my profile, and the one of the most recent tweets here, it shows that people just don't care right now. They kind of cared in January, February, and March when things were when things were pumping, but not as near as much as they did in the previous cycle when Dogecoin was pumping. So do you get what I mean? So what will it take? Because you can see here this massive spike of views and interest, and then now we've kind of just hit this this point where people are bored in crypto. They're not as interested, but I do have some hope because we have people like Justin Sun releasing these mega bullish applications on Tron, like Sun.pump and Sun.io, SunSwap, and all these different things of opening up the liquidity on the Tron chain. And we have Justin Sun himself saying September will be phenomenal. Now, is this going to lead to a bullish momentum on the cryptocurrency markets? Well, I believe so. And there's a lot of metrics that we're pulling together here for you guys. But we are also keeping it very simple. We're keeping it really simple. And this helps to actually keep it very simple because like Max said here, at Max Because BTC, shout out to at Max Because BTC, there is so much noise out there right now, and I'm hoping that this chart can simplify things for you. And now this is the whole point, of this channel is to be catering to the people that are have been in these cycles for multiple cycles, but also for people that are coming in that are new and don't understand that these things do play cyclical. They don't repeat exactly, but they do have a rhyming type of motion and price ups and downs. They rhyme. They don't exactly repeat exactly, but they do rhyme. And you can see it here where we've had these U.S. elections matched up with the BTC halving, the four-year cycle, and it lines up perfectly. So I hope this helps, guys. I hope this video ties everything together with what we've been talking about, and this gives you a better thesis and strategy to go on, because sometimes I think there is so much noise out there and it gets you so distracted. And honestly, the person that you're going to be battling the most is yourself through these market cycles, because it's the psychology of the hodl until it just feels like it hurts to sell. Then that's when it's time to sell, because when it's like when it feels the hardest to sell and things are up so much, that's usually the time. And then luckily we have charts that look like this that can at least give us a little bit of that range of where we can feel comfortable that we're taking profits at least around the top, and we can go to sleep at night and actually not have nightmares of thinking that we just we're gonna round trip our bags or something like that. But I hope this helps, guys. This should be a fun educational video for you guys to go through, and share this with your friends and make sure they watch this, because this will help them getting into Bitcoin, into crypto, because the question that they're gonna ask is, am I buying the top? What am I doing? Like, what's going on? Like, I don't know what to buy, or just, this should help give them at least a time frame and some easy metrics to look at, so it doesn't get too complicated. They just look, okay, oh, there's the halving. Every time there's a halving, there's a year of a movement to the upside, which gives me a window of about 4, 5 to 6 months of accumulation before it starts to get up into those points. And in the middle of that, where we are right now, is the point where people give up and they quit, or they get shaken out of the markets because of the volatility, because there are going to be local corrections that are mixed in with these parabolic moves that are purposefully done to shake you out and then make you jump back in when the market is at the top and it's the classic story. But you're not going to do that, right? You're not going to do that, because you're watching this channel and you're watching this video, and we're going to do this together. But all right, guys, make sure if you've watched this video to the very end, hit the like button, hit the subscribe button, ding the bell to be notified when I go live and when I release crypto content, so you do not miss a beat when it comes to these analytics and these breakdowns of the market. So then you guys can feel more secure going into this bull market, and you can come out triumphant, not just winning, but feeling triumphant. All right, guys, I'll see you in the next one. Peace.